We've got two speakers who are ready to lead us now in a conversation that starts off with the provocation of whether overseeing the national payment system is possible without overreaching. And as a subsection to this, to ask the question, how might we apply agility in the regulation of the payment system? I've got two speakers I've got two speakers in the session. One of them is online and one of them is in the room. Let's welcome Faith Stewart. She's in the room with us. Faith, if you can come and join me up here on stage. Let's give Faith a big round of applause. Thank you so much. And Faith, you can come and take this seat. You can come all the way around and take this seat next to me. And joining me online is Massimo Cirasino. This side, if you don't mind, please, Faith. Thank you. And Massimo is the head of payment systems development at the World Bank. And he's online. We can see his face. So Massimo, we can hear you, we can see you, and hopefully we'll be able to hear you as well. Ladies and gentlemen, the process remains the same. We're going to lead with a presentation. We're going to then invite Faith to do her presentation, and then we're going to open up to some questions and answers. And so, to the question of applying agility in the regulation of the payment system, let's hand over now to Massimo to lead us in his conversation. Let's give him a round of applause, ladies and gentlemen. Thank you.
So first of all, my apologies to be connected online. As I was embarking the plane, I discovered that I had the COVID. So I thought that it would be nice for me not to be there with you to avoid anybody else to get it as well. So that it's a real sad for me that I'm not there, because it would have been my 25th year anniversary of my first time in South Africa, which was exactly 99 when we were there to write the CPSS, now CPMI, core principles for systemically important payment systems. And, very soon I realized that South Africa was a special place, not only as a country, one of my favorite countries, together with Brazil, where I married. So my wife is Brazilian. It's probably my second favorite then. And then also because of all your efforts at that time to strategize around the national payment system. It was one of the first countries that I knew about that was doing such an effort. And we have learned a lot from you, all of you, certainly the South African Reserve Bank, that I want to thank for this invitation, but also, of course, the banking sector, and then obviously the broader national payment system. Over the years, I've known so many people, so many of you are in the room, and I want to greet you all. Just one name for all, my dear friend Tim Masela, who I would have loved to hug in person. And let me also remember our dear Dave Mitchell, who obviously is not with us, but has contributed greatly to the development of the national payment system in South Africa. Now, before I go ahead with my presentation, and everybody that knows me would know that I have to struggle to stay within the 18 minutes allocated to me. So I will do my best, but please stop me when it is time. I would like also to acknowledge the fact that it is like in sports. I am a big football fan, soccer for those that prefer that word. And yesterday, my team, beloved team Juventus, actually had a big victory in the Champions League. So once you are the captain of a team, then you are remembered as the captain of the team forever. So my title that was mentioned, it's of course a dear title to me. It is the head of the PSDG. But although I cooperate very much with the World Bank, I guess Harish is in the room. I'm now retired from the World Bank, so I love to be named World Bank and to be remembered as a former head of the PSDG. But I cannot hold this title any longer. But what I'm going to tell you today actually comes from my experience as head of the PSDG at the World Bank. So I think it's more than appropriate to keep it. So let me try. I mean, I have two challenges today, or actually three. One, I don't know why people always put me after lunch in conferences. So I don't know if it is a compliment to me, or it is just to say, as everybody is going to be sleeping, then we put Massimo there, or they think that I can wake you up. But that's first challenge. The second challenge is, of course, to be connected virtually, and the third is to be able to share the presentation, which I'm going to try to and do now. Can you confirm that you can see my slides?
Yes, Massimo, we can see your presentation. Thank you so much.
Yes, we're going to talk about oversight, and we are also going to go a little bit through the key concepts of oversight. But and at the beginning of my presentation, it will look like I am not being able to reach the goal of the panel, which is to make oversight flexible. For you in the marketplace to be able to play freely and competitively. But I'm going to make the point towards the end that you know, a very robust but also clear oversight framework will help the market play. So it's actually a precondition for me for the market to play well. So we're going to go through a little bit of those concepts of oversight, very briefly, obviously. Then we're going to talk about payment service providers a bit, because when I started my journey, that was actually in 1991 at the Bank of Italy, and then I joined the World Bank in 1998. So my entire career, now 32 years, you know, I have spent in payments. So I'm getting old, as you can see, obviously. But at that time, it was a kind of an easier gameplay. It was the central bank and the banks, basically. Nowadays, we have so many more players, and what we put under the generic name of payment service providers, but the service that these providers offer, they are not only offered to end users, but are also offered to intermediaries in the different parts of the value chain. So, you know, for some time, we have hoped that opening the range of providers with the addition of technology would have brought us to a better place. And we have seen some progress, of course, but only recently we are seeing the light at the end of the tunnel, and possibly that light is not the train that is going to hit us, but really a new world where we can really be happy with our payments ecosystem. So I'm going to try to end with some degree of optimism that can help probably shape your future work in this space. First of all, I don't have to spend too much time in South Africa to explain the concept of national payment system that is so comprehensive. It has to do with an entire matrix of institutional infrastructure arrangements for initiating and processing payment and securities transactions. Actually, I've learned this concept from you. So you have identified it, as I said, many years ago. You have codified in laws and regulation, and you have embraced it as an ecosystem. And we have tried at the World Bank to really get this inspiration and move it to the world, let's say, to make sure that everybody understands that it's not about one component, but it's about the full matrix. So I will not spend too much time on that. I mean, you have a list of the components here. I guess the presentation will be shared. I put some more references for you to have a look later if you are interested, but obviously I will not cover them. There is something that has been in the making for some years, and you know, I cannot see Harish, but he would be smiling for sure. That is, for a few years, you know, we have tried to put together a handbook on our national payment system oversight, because we thought it was important to capture all the experience we have collected throughout the world. And myself and my colleague Biagio Bossone, with whom I had written a paper that was kind of famous in our little community in 2001, we are trying to finalize this, by the way, this year. This is what we promised to Arish. We'll see if this is going to be kept for this time. And we have a definition of oversight, which is much more comprehensive and holistic than the one that the CPSS, now CPMI, issued in 2005, which is the latest time that the standard setting body, that is the CPMI, produced something specific on oversight. So oversight is a holistic central bank function whereby the objectives of safety, efficiency, effectiveness, and transparency are promoted by ensuring that the appropriate legal and institutional framework is in place, monitoring and assessing existing and planned systems, services, and instruments, and inducing change to foster an innovative, low-cost, and inclusive environment. So that tells us that over the years, and this can be seen in the following slides, which I will go very fast on, the definition has enlarged, as the scope also enlarged. So more objectives, more instruments. And again, it could be seen as this is over-regulating or overdoing, but I will end up by saying that it's not, in my opinion. So first of all, at the beginning, there was a certain discussion on whether the central bank should be the lead overseer, but I don't think this is any longer in debate. There are several reasons why the central bank has this role. But obviously, the central bank has also many other roles in the payment system that will need to be taken into account. And there is also a role for other authorities to play. Just this picture would tell us the complexity of it. It has a number of objectives, this oversight function. The scope has become larger and larger. It started with the large value, systemically important if you want settlement systems. It extended to other FMIs, financial market infrastructures like security settlement, CCPs, TRs, trade repositories, and so on. But it now goes to services and systems and schemes. And then you need a number of important principles to base your oversight function, which start from transparency and end with cooperation. Instruments have been, always in the hands of the central bank, but now we can really reflect on the fact that we have a wide range of instruments, including one that was neglected but was used, that was the direct provision of services. Central banks have always been at the center of a payment system, also as operators, so providing services. It's the largest payment service providers in many countries through through cash, physical cash. And the central banks have been created actually at the beginning in many countries to be the clearinghouse of the banks in the 18th century or in the 19th century. So this is to say that the central bank has now realized that it has all these roles and instruments and responsibilities, and it is playing this role more and more in a way that is appropriate to the conditions of the different markets. Obviously, no country is the same. And this is, to me, a good news, because some of the results we're going to see is going to be derived or are derived from those roles and actions by the central banks together with the market. The scope has widened, as said, and has moved from large value wholesale to retail payments, which again could have been seen as interference to the market. But when we look at the revolution that we are seeing now, we think it is, or at least I think, that it is very beneficial to the market. And then I will just tell you that in the handbook, we are going to focus a lot on making sure that the overseer has a process of classification that is dependent on the risks and the importance of the different players. So we have tried to systematize a little bit the different terms that are around this. So for us, and when I say us, I mean the authors of this handbook, and hopefully the World Bank will issue this, will agree, so it will become a World Bank view. So far, it's in the making. So the classification is basically understanding what the overseer should look at. And there are three elements. One is the designation of systems, and you have obviously in the principles for financial market infrastructures of the CPMI and IOSCO, a solid international standard that would help you designate systems depending on the risk. But also we talk about identifying payment service providers and also recognizing the instruments / schemes, depending on how you define them in the legislation or in the country, which means that the journey doesn't end at the providers. It starts with the systems, through the designation, because obviously they are at the core. It goes to the identification of providers with the different requirements that these providers should meet. But also it goes to the end at recognizing that there are certain schemes that have certain characteristics that would need to be properly understood first and overseen in a way that would make that instrument very sound and efficient. And an obvious example of these days is the difference between traditional credit transfers, which means typically they are credited, let's say, on the following day or even later, and instant / fast payments, which are immediately available to the beneficiary. And then obviously there are different rules that can be applied to all these different schemes. So you will find in the presentation, again, I will not cover it today, but some more information on this process of classification, which is a way to, let's say, for us to say, the universe will need to be properly defined. The different rules apply to different players or different situations will need to be clearly stated, so the market will know exactly what to expect from the overseer and what it would need to do to meet the objectives of the oversight function, which at the end are the objectives of the national payment system as a whole and should be internalized by all players as well. So you will find all this, so I will not necessarily go through this. One word on the PSP requirements. Again, I am for a very, very, let's say, open market for payment service providers, but it is important that entry requirements and ongoing requirements are set at the right level, depending on the risk and the activity that these providers are expected to play. So it is very important because otherwise you create a situation where either you have inefficiencies or you have excessive risks. So it sounds like restrictive, but for me, it's not restrictive. We all hope that with the fact that we have the police department doesn't mean that we have crime. It could be actually our ideal world is where the police department is there, but nobody would call the police. So that's, but if you don't have the police, I'm not sure you are in a better world. So that's on that of the classification. For years, we have been hoping that somebody will come to rescue our payment ecosystem and provide good services. We now move very quickly. I am talking to you virtually. We send emails, but when we talk about payments, there is always some friction. But finally, as I said, the fast payment revolution is arriving. The World Bank has a beautiful site in the context of what they call FAST project, and probably Arisha has already informed you on that. We have seen this journey starting from some time ago. I have been very frustrated for years, probably screaming to the moon on that, but now finally I can see that things are happening in many countries, and in particular, I have to note that this revolution, guess what, in many countries has started because of the central bank's active role, Certainly, it has benefited from the presence of a relatively large number of service providers, also beyond banks. And then obviously technology has played a role. I have been witnessing myself in my second country, that as I said is Brazil, the unbelievable revolution that has been introduced with PIX, which is the fast payment system instrument in Brazil. The system is operated by a central bank, but every provider can access it, actually should access it mandatorily if they have a license, so to speak. And the numbers are just astonishing. In June, we had 5.2 billion instant payments. Everybody in Brazil uses PIX, so the cash has disappeared. And it has changed our society in Brazil. I mean, I have several family members to whom I send pics from Italy or from wherever I am on a daily basis, and this is at zero cost for the payer and the payee. But the banks are able, and the providers are able actually to make money in many other ways. I mean, I don't have the time today to tell you how, but this is just one case, but in my opinion, by far, the most astonishing case. I mean, India is another one. There are others, but I know that the society in Brazil has completely changed because of that. And this is a dream come true. I'm happy that I could see it before dying, because this is what I have been hope to see for years. And now this is fast where you can find all this good information from the World Bank. And let me go to the concluding remarks. First of all, on oversight, there are some general trends we have been observing for many years. And let me here also refer to the great information provided by my colleagues and friends at the World Bank to the Global Payment System Survey, which is basically collecting actual information from all central banks around the world. And we have been observing upgrading of oversight role, more formal responsibilities, more powers, more transparency of the policies, and also of the assessments that are done on systems, but now also on schemes and on providers, at least key and core providers. There is increased interest in retail payments. This has started probably 15 years ago. And then the scope widening to payment service providers and quasi systems. There is still a missing piece in all this, good picture, let's say, which is that cross-border payments are still an issue. I mean, they are now under the attention of authorities, but we haven't seen the progress we would have liked to see. We have been talking about remittances for years. Mm-hmm. And you in South Africa know that there is an issue there, but also for other cross-border payments, I don't see the same, let's say, traction, the same passion for fast payments that I see at the domestic level in many countries. But probably this is going to change, and this is what I want to hope for the future. And let me just, to conclude, give you in 5 points what I've learned over all these years, 33, which is obviously an important number for some people, in Christianity. Obviously, it's the 30 years of Jesus Christ before that is spent in this world. But in my own 33 years in the business, first, I say we shouldn't forget, and finally we should recognize that the central banks are the real innovative force in payments. We have been hoping when the telcos, fintech, and so many others would deliver something there, would lead the revolution and so on. It hasn't happened. Maybe it will be, but so far the real players that have moved us to the next stages, because it has happened in stages, these have been the central banks together with, of course, the banking and financial sector. The other thing which we have always been saying, but I strongly believe in it even more now, is that business leads and technology follows. Those that want to start from technology and then believe that the business will be shaped around the technology, I don't think they are right. That's my point. The third point is that the people believe that there is a lot of ignorance out there, or that the masses can be manipulated in payments. This is not true, because the general public reacts quickly and positively to real convenience and proper project design. I think PICS shows that when you introduce an efficient, low-cost, clear product, everybody would understand it and would use it. So very important message in my opinion. The other point is that vision and perseverance are key in national payment system development, but also attention should be given to detail and discipline, because at times you have a great vision, which might be very good, but if you don't pay attention to the implementation, this great vision can collapse. And on oversight, this is clearly an art and not a science, although somebody can tell you that artificial intelligence probably can help us oversee. Yes, probably it can help, but it will continue to be an art. So in concluding my presentation, I hope I didn't go too long. Let me also pass the floor to my other dear friend and longtime friend, Faith Stewart, with whom we have been working for some time, and who has been a leading force in the development of the national payment system in Jamaica. I have observed her in action, and also, of course, elsewhere. I think she's been active in Africa as well. So, Faith, it would have been great to hug you as well. So let me stop here. I will stop sharing this screen so I can probably see you.
Massimo, thank you very much.
Thank you for your attention.
You're going to get a big round of applause in the room. I hope you can hear it. Thank you very much, Massimo. And I think he's even done a better job of introducing you, Faith, than I would have. And so with that, let's invite Faith to the podium as she takes on the question of overseeing without overreaching. And ladies and gentlemen, again, I think this is going to be a really, really important conversation in the context of the spread of conversations today. And just want to encourage you to step in with your questions and comments as well. But Faith, over to you.
Thank you. Thank you, Massimo. It's a pity we couldn't meet in person. It's been a very, very long time. Let me say good afternoon to everyone. I am honored to be here, and thanks to the SARB for inviting me to participate in what has proven to be a very interesting, very useful and purposeful function or event. I also want to say thanks to the coordinating team who worked assiduously with professionalism and with tremendous patience in making this event happen. I have been a part of many like events, and this certainly lifts the bar quite a bit. So congratulations to the SARB and all involved. So Massimo is always a hard act to follow from, but I'll do my best. And the presentation, he spoke about oversight. I am going to be focusing a little bit on regulation, in particular, the how of regulation, more so than the what or the why of regulation. The structure, the outline of the presentation is quite simple. We're going to talk about the yin and yang, which is really the balancing act between regulation and innovation. The role of supervision and oversight, in particular risk-based supervision and oversight, how collaboration supports regulation and innovation, and how collaboration enables improved regulatory compliance. And then we will talk about a few, I'll just summarize with a few key takeaways. Now, the regulation and innovation have been variously described as the yin and yang of the financial sector. Most of us would know that that is a Chinese term that really signifies that when complementing but opposing forces come together, they interact to strike a balance, right? And the governor of the Banque de France, about a year or so ago, in a speech he gave, had this quotation that you're looking at. It's a little flamboyant, the language. It almost sounds Shakespearean, but it says, regulation without innovation would be sterile conservatism, while innovation without regulation and financial stability would be devoid of the trust that is the sine qua non of sustainability. He actually managed to weave in multiple languages there. We got English, we got Latin, we got some Chinese, and of course he was French. Now, there are some important takeaways from that quotation. I found it particularly fascinating because it speaks to the fact, first of all, that regulation is not an end in itself, right? That's the sterile conservatism part of it. You don't have regulation just for the sake of having regulation. It must be targeted to specific objectives, and it must be targeted to specific regulated entities. Regulation also does not equate to financial stability. The statement without regulation and financial stability, I almost overlooked that. Regulation is no guarantee of financial stability. It requires, to the extent that innovation introduces risk, it may exacerbate risks that previously existed before the innovations came around, then it is critically important that those risks be managed. And it is the regulatory guardrails that seek to ensure that that actually happens. So here we're striking a balancing act between regulation and innovation. Now, that balancing act means there's a possibility that you could have too lax regulation or too stringent regulation, right? And too lax, if regulation is too lax, then there's a risk that risks will go unaddressed, that customers may not be well protected. And then on the flip side of that, if we fail to strike a balance, then we could have too stringent regulations. That actually is a possibility, right? That's why we talk about regulatory overreach. Because regulations are not the panacea. Regulations are effective when they're complied with, and if they are too stringent, they create compliance costs. I heard somebody talk about that this morning, about the concern regarding how do we comply without it being a burden. But those compliance costs, somebody has to pay them, and in all likelihood, it's going to be the customer who pays them. So it results in higher fees to customers. And the negative effects of all of that would be that it would stimulate innovation, the range of payment options would decline, and competition would be affected, and competitiveness would be impaired, right, among other things. So we should recognize that regulation, the absence of regulation, does not indicate, or the stringency, I should say, of regulation does not guarantee an outcome. And there may be situations where a failure actually occurs, and that may not necessarily be indicative of weak regulation. Nor is it always the case that in the absence of a failure, that regulations are in fact effective and sound. So it is incumbent on the regulators to continually adapt the regulatory framework to make sure that it is balanced and that it is sound and that it meets the objectives, the policy objectives that have been set. International good practice requires that we implement risk-based regulation, supervision, and oversight. And the question then arises, what constitutes sound and effective good regulation? What constitutes good regulation? How do we make sure that the regulation is meeting the needs? I have outlined here six requirements. They're not, by no means exhaustive, but they certainly should be considered in terms of how regulations are crafted, how they're developed, and eventually how they are implemented. Regulations should be focused on outcomes. I alluded to that previously. And they should be aligned with policy objectives. And to give you two quick and simple examples, in Singapore, the Payment Systems, the Payment Services Act does not allow e-money issuers to withdraw cash, or the customers of e-money issuers to withdraw cash. So you have cash in, but you do not have cash out. And there's a reason for that. They have determined that they want to move away from cash. Okay, so that's a conscious decision. Furthermore, they consider cash withdrawals to be the business of banking. And so they want it to continue to be so. In Ethiopia provides another example where they actually, the regulations there place a limit on e-wallet balances. As the mobile money, electronic money is being adopted, they want to encourage it, so they say, we want you to use the money in your e-wallets. So our regulation is going to provide a cap on e-wallet balances. No cap on transaction size, no cap on transaction frequency, right? As is the case in some other jurisdictions. So regulations have to be practical and focused. They should be impact sensitive. That's about balancing, making sure that the costs and the benefits are aligned, that you're achieving what you set out to achieve. They shouldn't be unduly burdensome. They should be clear and consistent, not implemented in a manner that could potentially be disruptive. Regulated entities should have reasonable certainty about the regulations that they're required to comply with. And I would like to add, they should have reasonable certainty about the value added of the particular regulation. I think that's useful and is likely to induce compliance more readily. There should also be clarity, especially when you in an environment, in a jurisdiction where you have multiple regulators. They should be clear about to which regulator they report with respect to particular aspects of their operations. There should be no confusion. This morning we talked about the role of the FIC, with respect to money laundering matters. We have the central bank, we have the Financial Conduct Authority, Financial Sector Conduct Authority it is here. Right, so there should be clarity as regards which regulator, which regulations and which regulator is actually operative. Regulations, I'm going to try to find a way to make this a little smoother, a little more efficient. Regulations should be risk appropriate. And what does that mean? They really should be appropriate for fit, right? Where risk is highest, regulations should be most stringent. That's simply what that means. And you could have, for example, tiered licensing requirements for service providers. Low-risk entities would be subject to a lower level of requirements, and those requirements would cover a range of things: governance, capital, and all the other relevant factors that go into licensing an entity. You could have different classes of licenses. In the UK and in France, they register small EMIs, and small is defined. But those entities are registered rather than licensed. so they don't have to go through the normal or the requirements that the larger entity would. It should differentiate between customer-facing and funds-handling entities relative to third-party service providers. There may not always be a justification for that, but the circumstances, I think, should be evaluated in each case. So does the e-money issuer, and I will use e-money because I find it convenient to use it as for illustrative purposes. But should the technology provider be subject to licensing and supervision and oversight to the same extent as the entity that actually handles customer funds, handles cash, and may, as a consequence of that, have more inherent risk in their operations? It should provide for the exercise of supervisory judgment to set higher standards beyond a base set of standards promulgated in the regulations. They could set higher standards, and in cases where, again, it's warranted, they could actually have exemptions, right? That's how regulation, the whole regulatory framework becomes more agile and more flexible and more risk-based. The principles-based approach is certainly applicable in many instances where the broad guidelines are issued without being prescriptive about the how of actually complying with those guidelines, while there will be continued monitoring and supervision to ensure that the measures implemented and the procedures that are in place are adequate and are effective in achieving the particular objective. Sorry, they should be responsive to change, and regulations, therefore, should be flexible. Basically, regulations should be assessed on 2 levels, and I do need to go a bit faster because I see I only have 7 minutes. But suffice it to say, regulations should be flexible, and they should be updated as circumstances warrant. There should be a process for review and update, and that actually goes to the heart of regulatory flexibility. How readily and how timely the regulations can be amended. And there should be a shared responsibility between the regulated entities and the regulators as regards achieving the regulatory outcomes. The regulated entities should not be simply trying to make sure that they check a box and say, I comply, but understanding the import of the particular regulatory provision, they should have a vested interest in contributing to the achievement of the regulatory objectives. While good regulation is necessary, it is never sufficient. And the highway code is an example of that, right? You may have good regulations, you may have good traffic codes, we need the police to enforce. And that's where the dependence on supervision and oversight to actually make the regulations achieve the objectives becomes very critical. Supervision and oversight, we just said regulations should be proportionate to the risk. Supervision and oversight should also be adapted to the risk profile of the service providers. And the comparators there are self-evident. They should target specific policy objectives and risks, and the regulatory activities, the supervision and oversight activities will vary. And I cite an example there, Brazil and Sub-Saharan Africa. In Brazil, as regards e-money issuance, and perhaps this has been outstripped by fast payments in recent years, but they report to the authorities on a semi-annual basis on competition and efficiency, whereas in Africa in general, there is a lot more focus given to on-site inspections, to risk management, to how risks are managed, to accumulating a lot of data to evaluate and monitor. So there are differences, and those differences, there's a reason behind those different approaches. And significantly, and this was raised repeatedly by my friend from Zimbabwe this morning, the issue of resource adequacy. A risk-based approach is good, but a risk-based approach, I go further and say it is necessary because oversight resources are not unlimited in any jurisdiction. So if you feel like you're short there, you're in the company of pretty much every central bank and every authority. So I'll speak quickly about collaboration and why that is important for making sure regulations are tailored to the environment. Collaboration can take many forms, right? It is, what we have now is a very important, very critical form of collaboration through this event, right? Then we have innovation hubs, fintech accelerators, which provide access to advice and to guidance and to mentorship and to tangible tools, and in some cases to funding as well. And then we have regulatory sandboxes that allow for experimentation and that allow for testing on a small scale to address any risks that may be identified before a full-scale launch. That is an important risk mitigant when justified. And it is not always justified to have every innovation going into a regulatory sandbox. I think that's perhaps quite commonly known. Not all innovations require sandbox testing. And M-Pesa proved that when the authorities opted for the test and learn approach with having the regulations follow the actual launch of M-Pesa. And we all know the story of its success. And then another question I'd just like to pose, I won't attempt to address because this could have a whole other forum to discuss. But how do you measure success in a regulatory sandbox? Is it the number of successful launches that follow once the innovator exits? Or what about when the test is aborted, or it's satisfactorily completed, but it points to risks being at such a level that the product shouldn't be launched? I think that also is a significant point for consideration, because certainly a test that is aborted may be as good a development as a successful launch. I'll skip the next two slides that talk about the regulatory sandbox model in the UK, the Financial Conduct Authority, and the sandbox model that is used in Singapore. Just to note that they are different on two levels, or perhaps even three. But in Singapore, the focus is on new technology. Not so much in the UK, it appears, where old technology may be used to do things differently, to introduce a service or product that is substantially new. That's one of the differences between the sandbox model in Singapore versus the UK, and also the requirement for licensing, some form of licensing in the UK before entry into the sandbox, which is not the case in Singapore. And Singapore has graduated to a sandbox that now offers the Sandbox Plus, which offers, in addition to the one-stop assistance, it also offers 400,000 of funding. I wanted to touch, and I can only touch it because my time is up, RegTech and SoupTech was mentioned this morning, so I'll just reinforce to say it's really using the technology that has successfully enabled the launch of new digital payment services to also improve and enhance regulatory compliance on the one hand and supervisory effectiveness and efficiency on the other. And I'll just, the takeaways are derived from everything I just said, that regulation is not an end in itself. Good regulation is necessary, but needs to be complemented by sound supervision and oversight, risk-based supervision and oversight. Collaboration helps both the regulator and the regulated entity and allows for any necessary reforms to be considered and implemented. And the sandbox and RegTech and SoupTech are as stated previously. And I will end there. I thank you very much.
Thank you very much. Round of applause for Faith. Thank you so much, Faith. I'll invite you to please take a seat with me, and I hope we still have Massimo online as well. I've got table 8, as expected, standing by with a question or a comment. We've got about 4 or 5 minutes before we get to the final spotlight, so I'm quite keen to get in maybe 1 or 2 questions for Faith and Massimo. I believe it's Zinhle going ahead, please. Zinhle?
Mine is, so the statement that was made might make sense and might actually be clear, but I'm sitting here and I just wanted, so this statement is quite clear, but I just wanted to understand what our great speaker was saying in terms of that regulation should be subject to change. When you say the statement, it sounds quite clear, but I'm sitting here and I'm thinking to myself, the intention of regulation is not necessarily always for it to change in the short term. So I wanted to just understand what she was meaning when she said that regulation should be subject to change, taking into account that change happens almost on a daily basis continuously, and is also affected by a lot of factors which have been discussed here. And usually when regulation is set, is meant to be effective for a long-term purpose. So just for her to just elaborate a little bit on what she meant by regulation should be subject to change.
Thank you so much, Zinhle. And I think you're getting to the heart of stability versus agility. Where do we draw the line? I just want to do a final scan in the room just to double check that we haven't missed anyone. And so, Faith and Massimo, I think it's a great question. I think both of you might probably have views on that. And what I'm hearing Zinhle saying is, what do we mean when we talk about regulation in the context of change? Because we often lead with the regulation being one of the ways in which we ensure stability, which feels like it shouldn't be changing much, but yet the environment is changing. So it's a fantastic question. I'm keen to hear what you think, Faith. And then Massimo, I'd love to hear your view on that as well. I think we've got another question. I've just seen table 22. So if we can just notate that. Table 22, won't you please go ahead?
Hello everyone, my name is Mpumelelo Mlangeni from Banks of Africa. So you spoke about the yin and yang of regulation as well as innovation. And for me, I think what's coming to my mind is what would be the key indicators where that balance is being struck within markets?
Fantastic. So how do we know that we've got the balance right, that we've got the yin and the yang? Thank you so much. I'm going to start off with Faith here in the room, and then Massimo, both of those questions, actually, I'd love to hear your view on that. So Faith, regulation in the context of change, and how do you know when we've got the balance right?
It's one of those things you know when you know, right? No, that's not the response. The important point is that regulations need to be flexible. And if you think about it in the context of innovation, then to the extent that innovative services are being delivered, to the extent that markets change, to the extent that you're seeking to go cross-border, with your payments. You want to facilitate cross-border activity. You have various goals, various policy objectives with respect to the regulations. Regulations must be able to respond to circumstances. There is no expectation that regulations are going to change on a daily or weekly basis. Sure. Obviously not. And by the way, when we talk about regulations, we're talking about all the rules, the laws, the regulations, the directives that come together to define what the expected behaviors are for the regulated entities. So your law is not going to change frequently. Your regulations even may not change frequently, but there may be other mechanisms that can be used to give effect to developments that where some specificity may be required or there is some element of change. Certainly, your central bank or your payment systems, your central bank law or your payment systems law may have, I don't know if this is the case here, but may have already provided for the central bank to have supervisory or oversight jurisdiction over payment service providers. 15 and 20 years ago, payment service providers were not envisaged. Some countries find that the regulations do not extend to that. It speaks to payment systems. Sure. Or it may speak to large value payment systems, the systems operated by the central bank. And so it poses a limiting factor for a central bank who now brings within its oversight remit payment service providers, right? Instruments, retail instruments. So that's the point. Regulations need to be responsive. Compliance with regulations should not be flexible. We expect that the regulated entities will continue to comply with whatever regulation exists. But the regulation itself should be subject to a process of review and be updated when needed.
Thank you very much, Faith. And I think in the interest of time, I'm going to take that response, which I think is really clear in terms of distinguishing the terms that we're speaking about in terms of the term horizons, but also what do we mean when we talk about a flexible regulation versus compliance, which shouldn't be flexible. What I do want to do is then take the question on the yin and the yang to Massimo. And Massimo, I hope that you can still hear me. One of the things that...
Sure.
Fantastic. One of the things that Faith spoke about is this idea of a yin and a yang, and using that metaphor to explain the relationship between regulation and innovation. The question that's come from the floor is, what are the key indicators that reflect that we've got the balance right? When do we know that we've got just the right amount of regulation that it still enables innovation, but still keeps the system safe and does everything else that regulation is supposed to do? So how do you know that you've got the yin-yang balance right?
Yes, thank you. There is also another more technical response to the issue of how to address the capacity to change regulation. I can address it offline with our colleague if she wants to write me a note. In terms of what you are asking me, I think, it is very important that the overseer understands, and the regulator, if you like, as we're talking about regulation, that oversight has to be done also outside the rooms of the central bank. So people have to get out from the central bank and see what the market thinks, how people pay, what is the expectation, what is the real value that providers give to the countries, to the users. So I had a big discussion with some former colleagues at the Bank of Italy that they said that a fast payment should be charged more than a regular payment, as if an email should be charged depending on the time when it arrives, which is ridiculous. And I said that, unfortunately, unlike the old times when I was there at the Bank of Italy, it seems that now the Central Bank of Italy is overseeing the profits of the providers rather than a national payment system. So there are measures, there are ways to measure it. The overseer has to impose this, a discipline to itself to measure the impact of its work. And it is done by looking at the efficiency and soundness of the payment services and systems. We have all the metrics we need.
Fantastic. So it all boils down to the efficiency of the payment system in place. Unfortunately, we've run out of time, and I think we would have had so much more to say in this conversation. I've got my next speakers on standby. May I ask you to please give Faith and Massimo a big, big round of applause. Thank you so very much, Faith.
Thank you.
Thank you very much.